Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we are going to talk about your business credit capabilities, 6 major components. And today's video is an eagle-eyed view from above for you to know everything that makes up the world of business credit. And what I mean by that is these 6 major components are going to really give you a clear understanding of what's available to you, what you can focus on and maybe even improve on as a business owner. Whether you're just starting your business for the first time or you're an existing business, these 6 major components will educate you onto what's available when it comes to acquiring business credit. Okay, so let's get started. And if this is your first time for the channel, welcome. If you've been watching our videos and you like them, please give us a thumbs up, smash that like button, and click subscribe. So let's get started. So let's talk about capability, is the power and ability to do something. So I want to let you know first of all that for you as a business owner, no matter where you're at, if you're just getting started, you're thinking about starting a business, you can do this. You can have a successful business, and you're just basically this financial part of it, getting credit, building business credit, acquiring funding so you can launch your business. It can be done, and I want to encourage you to focus on your dream and to focus on building a successful company, because you could do it. And by you listening to this video, we're just giving you some guidance so you can know what to expect and position yourself for success in the future for your company. Because it's all for your business, it's important for you to be able to raise capital and have access to credit for your business, and also separate you as an individual from your business credit. So that's why you're watching this video. For those of you who are an existing business owner, and let's say you've been in business for some time, but you just heard about business credit and you've been using your personal credit for everything, or been using your personal funding, or you need capital right now and you understand what is this business credit all about, this video is going to really help you and give you, kind of speed up the process for you to know what's available to you, what you need to focus on, what types of business credit is available to you as an existing business. So let's get started with, of course, the first one, which is the owners. This is one of the first components when it comes to acquiring business credit. Now, for those of you who have a startup business and you have no revenues coming in as a business, then you as an owner are going to be the first component in getting credit and funding for your business. They're going to look at you because the business doesn't have anything yet, doesn't have a credit file, let's say, you have no revenues. So you as an owner, what they're going to use is your personal credit. So when it comes to getting a business credit card, let's say, or you want a business loan to start your business, they're going to want to look at your personal credit. So your personal credit scores are going to play a big role with many types of credit and funding you're going to get from the very beginning. Now, I know there's other types of business credit we're going to get into and some of the other components. Right now, I'm just talking about component number one, which is you as an owner. So what I'm going to do in here in this video is I want you to take an assessment of each of these components so you know where you're at, and you can leverage each of these components to your advantage. And that's why this is so important for you to watch this video, because let's say you're watching this, you're like, you know what, I have bad personal credit. You know, I know that, I'm working on it. So are you telling me I can't get business credit? Absolutely not, because this is just one of the components. If you have strong personal credit, great. That's going to open up some opportunities for you to get business credit even faster, especially certain types of business credit. So let's talk about your personal credit scores. Now, as an owner, 680 credit scores or higher is kind of where you want to be when it comes to certain types of business credit products like business credit cards. Whereas if you're looking to get equipment financing, you could be in the 650 or higher credit range. I know SBA loans, they like you to be in the 660, 670 range or higher. So if you're below that, so we need to work on boosting up your personal credit scores. That doesn't mean you can't do anything. I'm just saying that's something you want to be aware of. I need to get my credit scores up. So some things you can do right away is, I don't know what your credit looks like right now, but let's say you have limited credit, so you can always add an authorized user. That's something that can boost your score up right away. An authorized user, there's plenty of videos out there about authorized user accounts, but you want it, the best type of authorized users are $5,000 or $10,000 credit limit. They add you as an AU, and that you inherit that credit history. on your report, and that can give you a nice bump, especially if it's a five-year-old credit card with a $5,000 or a $10,000 or more credit limit. That could be a nice boost to your credit score, and that's a fast way to do it. I'm not talking about opening up some credit cards, and that's going to take some time, but this is a quick way for you to boost your scores. You could reduce your credit utilization ratios. There's your overall credit utilization and your individual. So how do you do that? So just to understand what that means, if you don't know what that means, is you have credit available to you. You have credit card limits. Okay, so let's say you have 2 credit cards, each with, let's say, a $5,000 limit, so you have $10,000 in overall credit. And let's say on one of the cards you owe $5,000. You maxed out the card. So now you have a 50% overall utilization ratio, and you have a 100% utilization on one card because you have a credit limit of $5,000 and you owe $5,000 on that one card. So you want to focus on reducing your overall utilization as well as your individual utilization. Okay, so your overall should be under 50% at least, ideally under 30%. People in the 800 plus credit score range, their utilization is usually under 5% or less. Okay, so some things you could do to reduce your utilization on your overall and individual. Sometimes you can do balance transfers to spread out that debt on so not one card is maxed out, or you could do a pay down, etc. Another thing is you can increase the credit limits on a card to increase your overall credit utilization as well as increase your individual utilization, or decrease it. So for example, let's say you have a $10,000 credit card that has a $5,000 balance. You request a credit limit increase, and that $10,000 now gets increased to, let's say, $15,000. You just lowered your utilization now on that card because your credit limit's higher, but your balance stayed the same. So that's a strategy you could do to help improve your credit scores right away. There's plenty of other ways to do it. I'm not going to get into that, but those are just some short-term things you could do to boost your credit score. And that can maybe move you up into a range where you can now qualify for a business credit card or qualify for an equipment financing product, etc. Your personal credit reports. Now, this is really important because your credit scores are going to help you acquire certain types of credit products with automatic approvals because they look at your score, you meet that score, and you get approved. And it also helps you with getting a certain credit limits based on where your credit score is at. We've done videos on how if you reach a certain credit score, you can automatically get a business credit card, but you obviously have to set up a merchant account, etc. And I'm sure you're familiar with that particular strategy, but here's the video if you want to watch that one. That's where credit scores can help you. Credit scores alone, not your personal credit, just your credit score can help you get a higher credit limit with a business credit card. Because all they look at is your credit scores. On your personal credit reports, there are underwriters, and I'm sure you've applied for credit. It says this has a manual review or this is being reviewed. That's when an underwriter takes the report, takes the file and looking at the credit report to base the approval. Okay, so there's a human element here onto your personal credit report, and that's what most people don't realize. They think if I just have a 750 or 730 credit score or 700 credit score, I should get approved for a whole bunch of stuff. That's not the case, folks, because many times they go through manual reviews, they have an underwriter look at the report, etc. So I want to kind of expand on your personal credit report when it comes to component number 1. So the first thing is comparable credit. Comparable credit is when you're applying for a business credit product, let's say a business credit card, and you're a startup, your business credit, you have no business credit file established yet, no revenues as a business, you're brand new, you formed your company just a month ago, so you want to apply for a business credit card. So what they're going to look at is your comparable credit. So let's say you have a 680 credit score, you have decent scores, and you're ready to apply for a business credit card. The first thing underwriters look at is your comparable credit, and that is your personal credit cards. How have you managed your personal credit cards? What size are the credit limits of those personal credit cards? Do you have personal credit cards? How long have you had them? So your personal credit cards are going to play a big role in determining how much business credit card limits you're going to acquire. If you're co-signing for a business, if you're using a PG and to get a couple of business credit cards for your business, that's a fact. Okay, your credit limits play a big role in how much you're going to get in business credit card approvals compared to your personal. And all I'm talking about here at this point is if you right now say, I have 680 credit scores, I want to apply for a business credit card, I have no revenues, no business credit file established, so I'm going to just co-sign and be a guarantor. So that's what they're going to look at. Now, on credit limits, you want to have at least one card that has a $25 credit limit and 2 years of payment history. That's the minimum. Anything under that, if you have a $500 card, a $1,000 card on your personal, and that's all you have, that's too low credit limits, you're not going to get approved. So you want to have a $25 limit or higher, 2 years of history. The higher the credit limits you have on your personal cards, the more in a higher approval you get on the business credit card side when you're using your personal credit as a qualifier. Okay, so for small businesses, many times you're going to require a personal credit check and a PG for business credit cards, especially if you have no revenues coming in. They have to minimize risk, so you have to PG it. Okay, so your credit limits. Now, let me just tell you, if you have a $5,000 card reporting on your credit reports, then typically, let's say you had that card for 2 years and you had another $3,000 card, another $2,000. They're going to look at your highest credit limit card, and typically you'll be able to get 4 to 5 times that amount in business credit card approvals. Okay, so for example, if you have a $5,000 Capital One card, you've had it for 3 years, let's just say, good history and good load utilization, then typically you can expect your next 3 or 4 business credit cards that you get to be within the $3,000 to $7,000 approval range when it comes to credit. So you should be able to get $20,000, $35,000 in business credit cards for your business. So that's just kind of a really general understanding that the higher the credit limits you have on your personal cards, the better for you when it comes to applying for business credit cards. Your credit utilization ratios, like I said, stay under 50% overall. 30% is ideal, and you want to keep at least 1 card or 2 cards on your personal cards at 0 balance. So if you have 5 cards, have 1 or 2 at 0 balance, because bank card issuers like to see that. They don't like to see balances on all of your cards. So at least 1 or 2 of them you should have at a 0 balance. But let's say all you have are 2 cards, then you may have very limited credit, very thin file. Okay, your types of accounts play a big role also. So if you have a mortgage, you have an auto loan, like I said, comparable credit. So if you have a personal loan that you've had and you paid off and you want to get a business loan, then that's a comparable credit because you've had an installment loan on the personal side, you paid it off or you managed it well, and now you want to get a business loan. Okay, same thing with the credit card. You have some credit cards, good credit limits, you pay on time, so comparable credit, you want some business credit cards for your business. Okay, so that's going to play a role. Bank issuers. This is very important for you, and I know I'm talking quite a bit here on personal credit, but I'm going to move into the other components here in a second. But your bank card issues are very important. Who issued the cards on your personal side? That plays a big role. You want to use major mainstream credit card issuers like your Cap One, your Discover, American Express, Citi, etc. Whereas if your bank card issuers are high-risk banks, or you just have store cards, or even have like a jewelry store card, but you have a high limit, those aren't major bank card issuers. Okay, so that's not necessarily it's going to help your score, but it's not going to help you when it comes to when it's applying for like a business credit products like business credit cards. Primary versus AU account. This is very important because we have many files that come to us that have good, strong personal credit scores, but it's because they have like 2 or 3 AU accounts on the report, and their primaries are like $500 credit limits on their primary cards, or $1,000 credit card is all they have on the primary side. So in that case, you're going to get declined because your AU accounts, yes, they boost your score up, they look great, but they totally overpower your primary accounts. So you also want to have strong primary accounts, and that's where I was talking about at least having $2,500, $5,000 or more credit limit on a card, 2 years of payment history. And you want to have at least 2 or 3 of those to be ideal. Okay, so you want to make sure that your primary versus your AUs are not overpowering your primary. Okay, and this is relating to the business side. Okay, I understand AU accounts are going to help you qualify for personal cards that are score based only. Okay, your payment history, your length of credit history is another factor that they look at on the personal report. And I know this is pretty basic stuff for some of you, but for those of you who are not familiar, all I'm trying to do is provide some information for you to what to look for on your personal credit report. So we talked about personal credit scores, your personal credit reports, what's looked at. Now, personal income, that's another thing that's going to determine if you want, let's say you want to get a business loan. They want to, and it's a startup. You have no revenues. Well, how are you going to repay for the loan? Typically, micro lenders want to make sure you have at least make 30 to 35,000 minimum annual gross income per year. So if that's your minimum, that's good. And also, you may want to consider a personal business loan instead of an actual business loan. It's much easier to get a personal loan for your business than a business term loan, especially if you're a startup, you're in a high-risk category, okay? Personal assets is another thing that's as a component that's going to help you determine what type of cash and credit you can get for your business, especially during the startup phases. And this is mainly during the startup phase, because obviously if you have an existing business, you have revenues, then this component is not going to necessarily, you're not going to be using personal income most of the time or personal assets at all because you have a business. The business has revenues. So this is just one component. But what I want to tell you, if you have, let's say, bad personal credit and you're starting a business, okay? Obviously, there's other components we're going to talk about in this video that can help you get business credit right now, where your personal credit and your personal reports won't play a factor, but you want to work on improving and boosting your personal credit because it's going to help you not only with your personal credit, your personal financing, your personal life, but also it's going to open up more opportunities for you in the future for your business. Okay, so do not ignore your personal credit. Okay, work on building or rebuilding your personal credit while you're also building your company and building your business credit and getting credit for your company. Okay, so let's talk about number two. This is huge. The second major component that's going to play a factor in when it comes to acquiring business credit for your business is your existing banking relationships. What do I mean by that? Okay, let's talk about your personal life first. Your personal credit cards that you have, charge cards, store cards that you may have. Do you have an installment loan or had an installment loan recently that you closed? Any auto loans or leases that you have, lines of credit or mortgage? I want you to do an assessment of what you currently have and who you have those relationships with right now. Like, who do you have your credit cards with on your personal? Who do you have any store cards with? Do you have any auto loan with a bank, etc.? So there's all these banks out there that obviously offer these types of products, and this is just obviously several of them, but some of the major ones. So let's say you have a Capital One credit card right now, and you've had that for many years. You have a $5,000, $10,000 credit limit, whatever. So you already have an existing banking relationship with Capital One. So now you're starting a business, or you already have a business, okay? Many times people say, well, let me go apply for a Chase business credit card when you don't even have any relationship with Chase. You don't have any type of relationship, but you have a Capital One, and Capital One has business credit cards. They have the Spark card, etc. So it's to your advantage to leverage that existing relationship that you have with Capital One because you have a personal card with them for years. So why not approach Capital One and apply for a business credit card that you already have, because there's an existing relationship. That doesn't mean you're going to automatically approved, but the likelihood of approval and getting even a higher limit is stronger because there's already that connection. You're already in their system. Okay, so that's one thing I want to make sure you do an assessment of all of your relationships that you currently have. Okay, so you may have even some store cards. Let's say you have many of the store cards, by the way, are issued by Synchrony and Community Bank, and they actually have many business credit products that are underwritten by those banks as well. So that's where it's understanding who's issuing what card, what credit product, because you can leverage those relationships. Okay, see, BB&T and SunTrust just merged. So if you had a SunTrust account or a BB&T account, now they actually merged and became Truist. Okay, so they have business credit products as well. So all these banks, they offer personal products that are on the screen, but they also have business products, business credit products. So that's why I want you to kind of understand your existing banking relationships and to leverage that. That's why it's important for you to establish a relationship with your bank and your bank card issuers. The more relationships that you have, the more opportunity you could acquire more types of credit products on the business side. So you're basically moving from personal to business. So let's talk about component number 3, which is your business bank account. When you incorporate your business, you get your EIN, you're going to set up your business bank account. So these factors play a big role when it comes to a lender or a card issuer or even an alternative lender wanting to extend credit to you as a business by using your bank account data. Because you hear about banking products, that revenue-based financing, etc. That's where they look at your bank account. They don't look at your personal credit report. They may just check your personal credit score, but they don't look at maybe they don't even look at your business credit report. So that's where each of these components open up certain types of funding, business credit, and funding for your company. Okay, so your bank account history is how long you've had your bank account. So when you open up your business, set up a business bank account, and they're going to look at your deposit activity is an important thing. Are you having daily deposits, weekly, monthly, quarterly, yearly? So if you have frequent deposit activity, that's positive. That shows cash flow coming in. They look at your average daily balance. This is huge because even the bank that you have your account with as a business, I never can understand. Many times people come to us looking for a traditional business line of credit, and they have a bank that they have a relationship for years. All the cash flow goes through there. They have good balances, etc. And the first thing we ask them, do you have a line of credit with your existing bank? And they go, well, no, I haven't applied. Well, that's the first place you should go is with your bank that you have a relationship with to get a line of credit or even a business credit card. Okay, so that's where you want to leverage these relationships that you may not have even thought of doing. Okay, so leverage that, but also you can scale, build new relationships, get more business credit outside of your existing card relationships or your bank account relationships, etc. Now, you may be thinking, well, why do I need all these different relationships? Folks, I'm telling you, it's all about you. Diversification is key because a bank can reduce a credit line. A bank can close a credit line. You all see what's going on with Wells Fargo, where they just announced that they're closing, personal lines of credit. So literally everybody who has a personal line of credit, they just close it down. So if that's all they had for access to personal funding, guess what? They just lost it. That's why you want to open up many different sources of credit and revenue opportunities for your business, okay? So your average daily balance. Now, what I mean by that is that if your average daily balance is low, is negative, or it's a small amount, then it looks more favorably when it's positive and you have larger average daily balance, because that shows that your business is able to manage its finances. So when you have NSF funds or overdraft account, that's a very bad thing. Okay, so you don't want to ever have an NSF or a zero balance. A healthy average daily balance looks good on the books, okay, in the eyes of the banks, in the eyes of lenders, etc. They look for recurring payments coming out of your business checking account. So when a lender wants to see your bank statements, they want to look at recurring payments because they may think you may have another loan that a lender's taking out payments on your business checking account. So they look for that. They look at your NSF history, non-sufficient funds history. So these are things that are going to play a big role in your ability to get funding for your business. So if you're going to leverage your revenues, your bank account data, there's companies like Fundbox. We've done a review on them, and we explain how that's a great product where they just literally look at your bank account data. They look at your revenues coming in. You have to be doing at least $4,000 a month in revenue coming in, but you can get a line of credit with them easily. They do a soft pull on your personal credit, and then so that's where your score is going to play a role. But you can have a 550 score. Now I think they bumped it up to the 600 score. And then when you draw on your line of credit for the first time, when you're approved, that's when they do a hard pull. But watch that video on the Fundbox. That's one example of a lender that looks at your bank account data only, and of course, in your score only. So let's talk about number 4. This is a big thing, and this is one of the reasons you're probably watching this channel is your business credit reports. So obviously, there's many different ways for you to build business credit and get business credit for your company. So as a startup, there are actual credit products. There's vendors, suppliers, gas cards, retailers, even business credit cards you can get once you've established and built business credit. And there's also easy ways for you to get business credit. We've done plenty of videos on Net 30 accounts, and these are companies that will extend credit to your business as a startup with no business credit report established, with no revenues. They'll give you $1,000, $2,000 credit limit, but you're limited to use that credit line at their store, buying their products and services. But that opens a door for you. It gets you in there to start building up your business credit reports so you can move up to higher levels of credit for your business. But like I said, don't just rely on your business credit reports and say that's all I'm going to build. I'm not going to focus on improving my personal credit. I'm not going to focus on some of these other things, these other components, because you're going to miss out, and it's going to be detrimental to the success of your business. And what I mean by that is because, like I said, your bank account data is very important. So don't think that, I don't mind, I can overdraft on my business account and it's all right. I'm building up my business credit reports. They won't look at that. Okay, so they will. If you go to a lender and they pull your business credit report, but they also, let's say, want to look at your 3 months bank statements, boom, they're going to see that. Or if you go to, let's say, I want you to know that all these components are very, very important. You don't want to neglect any of them. Okay, so you have your business credit reports with these major business credit report bureaus that we've talked about. So when you're building up your business credit report, it's very simple to do. There's no magic behind building business credit, folks. It's nothing that's secret. It's nothing that's impossible to do. It's very simple. We shared many videos. We have our business credit building system that walks you through the process step by step. But you can add your expenses, your utilities to your business credit reports. You can get some Net 30 accounts, maybe a gas card or two, right off the bat, simple. Then you can maybe start with a secured business credit card if you have bad personal credit. And let's say you have great personal credit, you could even build your business credit even faster, because then you could do our business credit card funding program to get you 4 or 5 cards. And that's revolving cards reporting to your business credit reports, etc. So there's plenty of ways for you to build business credit. Now, if you're an existing business, it's even easier. Like if you already have an established business and you have revenues coming in, that opens you up to even more opportunities. Okay, but like for example, let's say you built up your Experian business report, then there's business credit cards you can get with no PG. That will pull your Experian commercial report. There's Capital on Tap. We just did a video on that. They pull your Experian commercial report, and they base their approval on that data. Okay, so that's why it's important for you to also build up your business credit report. So for those of you, if you're a startup and you're just getting started, like where do I start? What do I need to do right now as a business? And that's where it's important for this video is to first do an assessment of where you're at. Where your strengths are, where your weaknesses are, so that way you know where to work at and what you can take off on right away. Okay, so let's talk about business revenue. Your revenue is another component that's going to open up funding opportunities for you to get business credit for your business. So you have your gross revenue, and that's where certain lenders look at that gross number. They just look at revenues. They don't look at your cash flow or your net income. Okay, but when it comes to traditional lines, more like your banks, they look at your net income for a traditional business line of credit. They want to look at your profits after expenses. So that's where they may want to see your business tax returns. Your tax returns says everything about your business, because you can have strong gross revenues, but you can still be in the negative. You could still not have a net profit as a business. So if you're trying to get a loan or a line of credit, and there's no net income, there's no profits after expenses, how can you pay for the loan? Or how can you repay on a line of credit? So that's where more traditional banks will look at your net. Whereas more alternative lenders are looking at your bank data. They look at your gross. And then of course, that's where as a business owner, it's important for you to understand the difference between what's available to you. Now, the gross revenue lenders like Fundbox, like Bluevine, like SnapCap, etc. Their products are a little pricier compared to your traditional lines because they're only looking at your gross. Whereas on a traditional line of credit, you may get a better interest rate because they're looking at your net income. It's more documentation you have to provide. It's harder to get approved for, but you're going to be paying lower interest. on a line of credit or a loan from your traditional financial institution. Okay, so that's what's great about business credit is there's so many creative ways for you to acquire business credit and build business credit for your company. Now with your business financial statement, this is going to be some documents that you want to make sure you have available, that you understand how they operate, a balance sheet, P&L statement, cash flow statement, statement of owner's equity, because these may be documents that your bank may require from you. So if you're trying to apply for a line of credit, they might want to see your most recent P&L statement for the first quarter or second quarter, depending on what time of the year we're in, or year-to-date P&L statements. So they might want to see that. So your business financials are very important when you're going for more obviously traditional funding, traditional lines of credit, etc. Okay, so let's talk about 6 is your business assets. There's asset-based lenders out there that will look at your assets to extend funding to you or credit to you. So as a business, do you have cash on hand with the equipment, in real estate, equity in real estate properties, inventory, vehicles that you may own outright, or copyrights and patents, intellectual property, office furniture, etc. These are your business assets. So you can see we went over all the different major components that open you up to the world of business credit. So there's your personal credit that we talked about. We talked about your bank account data, your revenues. We've talked about your business assets, etc. So there's 6 major components that we talked about. Your business credit reports. So this all makes up the world of business credit. And for you as a business owner, it's important, and even investments. I forgot to talk about that one. Sorry about that. But as a business owner, I want you to kind of look at these 6 major components and see where you're at, where you need to, what direction you need to go into, and what areas you need to work at. So if you found this information helpful, give us a thumbs up. And also check out our step-by-step business credit building system, businesscreditbuilders.org. What we offer as a business, we do have a step-by-step business credit building system. So if you're looking to build up and get business credit for your company without using your personal credit, that's where we provide you many vendors, suppliers, retailers, etc. That will only extend credit to your business without a personal credit check, and they help you build your business credit. Whereas on the funding side, if you have great personal credit or you want to get business credit card funding, we offer done-for-you funding. We also do business term loans, etc. And especially if you're an existing business, there's many funding products that we offer there too as well. With that, I hope you found this information valuable. Thank you so much for all your support, and we wish you the best success and look forward to next video. Make it a great day.